Hello guys, right, I was just off out with the dog, but I just made the mistake of tweeting something that I consider to be very important, the 5-swing trend. And there's a few very easy rules. This is swing trends, not candlestick trends, not the 3-candle reversal, but the two things fit together like a glove. But we'll talk about the swings. Now, one thing I've never studied, I've studied everything, Fibonacci's, you name it, everything, but I didn't get involved in Elliott Wave. And I have a strange feeling that I reinvented the wheel, as it were. Elliott Wave is what I do, but to go backwards and study that, to compare it with what I do, is regressionary, to say the least. So if I'm stepping on any Elliott Wave traders' toes, I apologise, and I always apologise about that, because it strikes me it's probably very similar. I know they have ABC waves and stuff, which is probably this bit here, ABC, the pullback, because the pullback is what I'm talking about here in the 5th wave. So we have, in order to consider a sort of swing 3, rather than, and I've talked about this many times in videos, but if you're a new follower you won't have seen that probably, but swing 1, swing 2, swing 3. Swing 3 has to always be the break of some sort of valid resistance, and by valid resistance, support rather, by valid support in this instance, in a downtrend, the price has to have created a new high. So we're on the line charts just to make things a bit clearer, but that's higher than that high, and I think actually the line chart might be anyway, but we're not worried about that for the, yeah, it is slightly by the looks of it, not worried too much about that. But so in this bigger swing here, swing 1, 2, 3, we have to break some sort of support, and then as you can see, swing 1, 2, 3, it's pulled back to test old support as resistance. That's always swing 4, the retest, as is swing 4 here, the retest. So we always validate our trends by being able to see price break through some sort of support in a downtrend and test it as resistance. That's swing 1, 2, 3, pullback is 4. Swing 1, 2, 3, we've broken some sort of support, pullback is swing 4. Swing 5, swing 1, 2, 3, 4, swing 5 is your profit move, and it will often coincide with a break and close on the RSI histo. Same here, swing 1, 2, 3, 4, break and close, RSI histo, off you go to the downside. It really is that simple, guys. So 5 swings. Let's put the support on the low of the first one. 1, 2, 3, 4. 3 is the one that breaks, or you could count it from here. Swing 1, 2, 3, 4. That technically, no, this one's higher, isn't it? So that technically isn't the correct place to do your swing from. But we're splitting hairs now. Swing 1, 2, 3, pull back 4. You will often pull deep into the support, which is important when you're putting your stops. You want to be careful, make sure your stops are above, I was always taught swing 1. Technically speaking, you should be able to find some sort of resistance in this support level here that will protect you. Much the same as here. Swing 1, 2, 3. Pullback is 4. Some call that the accumulation and distribution phase, depending on whether you're going long or short. It is just, in my opinion, the point where they know they've stated their intent, i.e. swing 1, 2, 3, broken below old buying area. You know, you can use supply and demand if you want. There is demand here. The demand failed, collapsed, call it what you like, and finally the sellers have come into the market. The buyers have been beaten by the trend down. They've tested it once or twice or whatever here, you know, come down to here. Let's draw a line on that and see what the see what the candlesticks actually did. No, they didn't get anywhere near it, but they tested this resistance, you can see. And that's it. That's the mechanics. I'm convinced that was built on the herd instinct of traders. That pattern just happened because of that, and other traders will tell you that as well. And then they built the algos on it, and they have failed to, for whatever reason, change that for decades and decades and decades. I don't know when the stock markets first became a thing, but you know, probably we've all heard about the depression of the 1930s, so things are going on well before then. So there you go, guys. Swing 5 is where we consider entering the trade. Swing 5 is this bit here. Always, it doesn't matter if you've got 5 swings here, as long as you break some sort of demand area or support area and then come back to test it, that's when you know you're ready for swing 5. That's it, guys. It's Saturday morning. Have a good morning, and thanks for watching.